Wednesday, August 23rd, 10 o'clock California time, market analysis. Stan Ehrlich, good morning. You know, I always start out with the stock market indexes and typically the S&P 500, which is rallying very nicely today, up and away from the last oversold condition. Let's look at the daily data first, the bigger picture. And we all know by now, of course, that October 13th was a bullish engulfing ER buy signal at the bottom of the bear market to the exact day. And it was the head of a small head and shoulder bottom. And we are making, a few weeks ago, the highest high for the whole uptrend. And I call it the bull market of 2023, which I think is going to last even longer than this year, probably well into next year. And we recently had a bearish engulfing at the high, of course, in a resistance area, which was just perfect. And after 3 days of futzing around a little bit, it dropped off sharply. But it left a gap behind, ladies and gentlemen. And we need to go up to 455.49 to close the gap on the spider. I think we're heading in that direction. But there's possibly some problems about to happen here. Pay attention. We had a rally high on June 15th, the middle of June. We went up to resistance and reversed and had a top on July 27th. Now, the number of days from that high to the highest high is X. I'm not sure exactly what it is at the moment, not too important, but it's probably a couple of weeks into the future, which is going to bring us into the beginning of September, which is the month when we frequently top out, maybe even this month. And I don't know, it could have been actually July 27th, and we may not make a higher high. That's what I'm about to say. If we stall out on this rally only at 444, and I'm allowing it to go up to, I don't know, 450 maybe, but in the next week or two, and maybe we'll have a bearish engulfing also, and maybe we'll get overbought, but that remains to be seen. Then you have a possible last shoulder high on a head and shoulder top, because that would be the first shoulder. The head with the bearish engulfing is the head of the formation. And the distance between the first shoulder and the head is approximately the same to the last shoulder most of the time. That's two ambiguous words, but that's the way it works. So you know about when it's supposed to happen if you're looking for a head and shoulder top, and you also know about what price. Now, the neckline would be drawn off of the low on June 26th and the low of last Friday, which is almost flat. I'll get around to measuring the downside objective if I think it's actually going to start to develop. This is prematurely commentary, if that worked, that phrase, premature commentary. So starting at 444, I'll be watching for failure, strength failures, and reversals, etc. But it might, as I just said, get up to maybe even 450 or so. But somewhere in that ballpark, somewhere in the next week or two, if we get those kinds of pieces of evidence, I'm going to start screaming bloody murder. This is a head and shoulder top, and we're going to go down into the October lows. Now, last year it was so good, it was incredible. I've never seen one be so profoundly important and on time, right smack in the middle, October 13th of the month, and huge turning point. Most of the time, they're really good buying opportunities, sometimes pretty profound, but not always. So we'll have to watch this daily as it gets closer and closer to October and into. That's where I'm at. I'm basically very bullish. This head and shoulder concept may not pan out at all. We may just go right up there and close that gap at 455.5 and keep on going and get very, excuse me, very overbought in September, then some sort of a downside correction in October. Okay, I'm still, talking October lows of some sort. What about the DIA? This is pretty interesting. 3 days in a row, we had almost the exact same low. That doesn't happen too often. And it was right smack at my support line, which I have had here for a long, many number of weeks, months. So no surprise, at support, oversold, starting to rally. This is the first day of decent strength. I don't have any bullish engulfing capability today because we didn't get to lower than yesterday's lows. Otherwise, I'd be screaming bloody murder. Maybe we'd have a bullish engulfing, but nope. It's an inside doji at the moment, just getting stronger. I'd love to see it close above 345.20. That'd be a new high close for the last 5 days, including today. That'd be interesting. That's good. That's bullish. Next chart is the 1 minute spider, and we are just not stopping here. We're up 440 now, and that's a pretty good rally these days. So I'm liking very much what I'm seeing. Seems I caught this rally pretty nicely. And just a moment, good. The cues. Now, you know, there's about 150 symbols in the cues, so it's not a very broad like the Dow Jones index, but here we have the makings of that head and shoulder story a little bit earlier. We are on the way up to the possible shoulder high, which could very well be around 373. I'm a little premature with this. Let's see what happens when we get to that ballpark, and it could be any day now, because if you measure from the top of the market in a resistance area overbought, unfortunately, no bearish engulfing. And the first important high over here, June 16, you're going to get something in the time frame of where we are. We might even be a couple of days late. Not that big a deal. So we're about the right time, and we need a little bit more strength in order to have a decent looking shoulder. Then if it starts to head south, I'm going to start screaming bloody murder, last shoulder high on a head and shoulder top going down into the October lows. Let's see what happens. And let's go to the Russell 2000 daily data. That could even happen here because of that rally high in which we did get a red bearish engulfing, and around the top of the market, not quite the highest high, unfortunately. So I can't call that really a great signal, but remember, these do happen during top and bottom formations and not necessarily the highest high or the lowest low for the turn, but frequently they are. So that's my concept here, an analysis on stock market index. Boy, do I love the precious metals these days. Look what's happening. Well, I'm going to start actually with the 10-year notes and the long bond on this chart. Remember the cycle, and I have to shift this. Excuse me, I see I have a little problem. Minor. Bing, bing, bing. Okay, great. So the last cycle low was pretty much on time. The one before that was incredibly on time. The one before that even had almost a bullish engulfing, a double bottom on time. The one before that had a bullish engulfing ER buy signal on time. And this cycle low was on time. What about the one before that? Pretty much on time. And oh my God, this cycle has been fabulous. Not so great if you're going all the way back to January of 21. But the last 6 or 7 88-day rhythms have been whoppers. This one was a very good rally. Wasn't quite like that one or like that one or like that one, but hey, never make the market. You can never make the market do what you want it to do. You always have to move with it. So what about these highs? Sell signal on the top cycle high. Sell signal during the top cycle high. Sell signal starting the decline or a little bit after the highest high and then a little bit early. But if you sold short during the window of opportunity, the red bar coming from the top down to the price action, you would have made some money. And now we have a rally coming up into this window of opportunity. A little late, I have to say, but it's a healthy rally. We're up over 1.5 points now. That's pretty darn good. And we were oversold, but not particularly in an area of support. It was actually new lows for the whole trend. But nevertheless, oversold conditions do turn the market up in new low ground or new high ground for many, many years. It's a great tool. I love it. I use it all the time. So are we going to have a cycle high maybe a few days from now, a little late or barely in the window of opportunity, the red zone? Let's find out. If we do, I do not want to see a new low for the trend. I want the little rally high we're about to see to be a minor downside dip and then coming back up again. In other words, I'm saying I don't think the cycle high is going to work very well, if it works at all. This low could be the second low on a very broad double bottom going back to 2 cycles earlier. That would be October of last year, and now August of this year, and be the beginning of a formation which is a very broad double bottom. We need to get up to and close above 135, a substantial move from where we are at 120, in order to break out of this formation. And we cannot make any significant lower lows. Maybe a little double bottom in here, you know what I mean, dribbling around some, but nothing crashingly bearish or anything. So if this maintains a bottom and we do start climbing in the next days and weeks and a month or two to come and break out above 135, you got a long-term bull market trend and stabilizing interest rates and declining expectations of interest rates, period. Next chart is going to be the E-mini. So up 4.5 now almost on the spider. The E-mini is making new highs for the last few days. Excellent. Great. Oversold conditions turned it back up. We bounced off a little previous low back in June. Pretty good. Trend is obviously up. I'm liking what I'm seeing. Let's see how far this can carry. I'm obviously bullish and have said so for damn near a year now, since October 13th last year. NASDAQ, same thing, doing very, very well. So it turned past tense at oversold conditions, looking good. Just regret not getting a green bullish engulfing here. Too bad. Next, bonds. We just talked about it on the cycle chart I had a moment ago. That's the EC forecaster, Ehrlich cycle forecaster we were looking at on bonds with the 88-day cycle. But this is just a plain old, and I'm expecting problems when we get up to 123 resistance. And I think we're headed there fairly quickly, it looks like. Next, 10-year notes. Same kind of comments. I think we're heading for 110, 111, and we're pretty much halfway there already. But I hope that doesn't stop the rally for any length of time, if at all, and it keeps on going. Remember, major long-term upside breakout is going to be making new highs for a whole year by the time we get up there. Very, very long-term bullish. Next chart is crude oil. We sold the top day in crude oil. That red bearish engulfing right here, fantastic. That's why I have built the Ehrlich reversal automated trading system. And we have a new low since that sell signal, the high day. And we may have a new low close if it can sink a little bit more. I'm looking for at least to move down below 73, because that's the beginning of the best significant support area. There are a variety of little ones on the way down, but nothing like 73 down to 65-ish. So that's what my downside objective is on crude. Heat, unfortunately, didn't get the high day for a bearish engulfing, but I do think this is topping out. And let me get rid of something here real quick. I don't like these labels. Sometimes they interfere with things. Good. We might have a small head and shoulder top. Only if this thing starts breaking down real quickly, like before the end of the week. I'll allow maybe Monday of next week. But real quickly, we need to close below this little blue line. If that's true, your shoulder is a little bit of a soft one right here, but that's the pivot point, the lowest low after the shoulder, first shoulder, and the head of the formation 2 days later. Then the lowest low after the head, but before the last shoulder, which is right here, Monday of this week. If it is a shoulder, I cannot guarantee that yet, and I wouldn't guarantee anything to begin with. So let's see what happens. That could be the case. I'm kind of pretty much interested in this. Next chart. Oh, and the minimum downside objective, if that's correct, minimum downside objective, and I think it'll go down further, probably down to 2.7. would be a little under 2.8 for the minimum if all pans out correctly. And head and shoulder tops and bottoms are my favorite formations. I've seen them being very, very small, like 5, 10, 20 minutes, and 10 years in size. So, and thousands of them over the 52, 3 almost years I've been in this industry. Now, natural gas. Bear market, obviously, there's your head and shoulder top, worked like a charm, and then exceeded the minimum downside objective way back on October of 22, almost a year ago. So way down we go. A couple of good signals. That's a great one there. That's okay right there. A few sell signals here that didn't produce very much on the downside, if they worked at all, the way they're supposed to. But this last one is doing just fine. And zooming in a little bit to this latest signal, we have now a new low and probable new low close since my bearish engulfing on August 15th. It happens also to be in approximately the same range as 3 other ones lately. Interesting. It did stop in overbought conditions at a resistance area. So no surprise it's doing what it's doing. But now, ladies and gentlemen, that's almost to my minimum expectations. It's not quite oversold, so I think there's more elbow room, and this level at 2.420 could be reached, and we'll see what happens when we get there. That looks like a decent support line if you go back in time and look why I've drawn the line there. And that's because of that low, these lows in here, those lows, and so on. So that looks reasonable, likely. Next chart. Bullish engulfing. Oh, I love the precious metal markets these days. I can't believe all 4 metals. We have had buy signals in the last few days, and they are working fantastically. I can't believe it's all 4. That's copper included. So silver, gold, platinum, here's gold. Bullish engulfing Monday. The other silver and platinum were a day or two earlier than that. Took off like a bat out of hell today. Already up to the first layer of resistance and through it. So I'm thinking the gold just might, get back up into this blue zone again, 2030-ish. I wouldn't be surprised. There's going to be some problems on the way up, maybe at 1988-ish. But the first resistance level we already reached today and are maintaining those levels, hasn't dropped back. So it looks good to have broken it. Next chart is Whopper, and I am running ER3 on this, the automated trading system for a trend following or position trading or investor, swing trader type of signals and trades. So we caught the top in terms of the bearish engulfing, rode it down to the almost exactly, I think it was, the bullish engulfing we had on Thursday of last week, which is almost the bottom of the move. By the way, on the gold on the previous chart here, that is the exact low day. Back to silver, almost the low day, bullish engulfing, ER3 kicked in a trade, never was a losing position on a closing basis, and we are screaming higher, but hey, watch out, we're getting overbought already. But, you got some dollars in your pocket, we hope. I'm now looking for this overbought condition to stop the rally for a minor downside correction. And that could be any time now. There is a chance it could get all the way up to 25.30 first, and another day or two, big push, and get even more overbought than the current level, which is almost at 80. That's pretty good. But it has been a lot more than that sometimes, but only a few times a year. But it's possible. Let's see how much more we can get out of this. It's a great signal and a great trade. How about platinum? You can't get too much better. On Thursday of last week, it was almost the lowest low for the decline. Big green bullish buy the heck out of me signal. The low the next day was almost exactly our bid, and we got long at the low of the day, give or take a few damn ticks. Profit on the first day, gave a few ticks away the next day, and yesterday we made more money, and today we're making more money. Show me the money. Next. high-grade copper. At the bottom of the break, we had a buy signal. The next day, we bought it pretty close to the low, not quite as accurate as some situations. Profit on the close, more profit 2 days ago, Monday, 3 days ago on Monday this week, more profit yesterday, and guess what? More profit today. The highest high and the highest close since the buy signal. That's it. That's all four metals. Every one of them has a green bullish at the bottom or real close to the bottom. Okay, soybeans. Sell signal on top, almost a high day, worked great. Went down to support, at support levels, previous highs for many, many months. We bounced and in oversold conditions. By the way, you know, the subgraph down here is my custom RSI, Relative Strength Index. I learned it from Wells Wilder himself back when I was in the lecture circuit in the 70s, 80s, and 90s, and maybe a little in the 2000s and so on. Had a lot of fun lecturing on technical analysis all over the world. What a kick. So what are we going to do next here with soybeans? We tested support. Looks like we're on the way up. This could be horribly bullish. If we don't rally enough to break out above these highs of 1440, we'll call it, on a closing basis, and it stops and turns down at any point from here up to there and starts to break below the blue zone, then we're going to go all the way down probably to 1090 and test these major lows. I totally am aware this is a weather market situation, corn, beans, wheat, etc., and global warming, blah, 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 for real. And what is that going to do to this year's crop? I don't know. I don't farm. So let's find out if this has got enough strength to start to make new highs. Then I'm going to continue to talk about the bullish side of things. But we did dip down and came back up a little bit at the moment. And if we start going below today's lows, that's going to cause me to lean in the direction of watching to see what happens if it tests the blue support area, and then below that, maybe. So I'm kind of between a rock and a hard spot. Next chart, bean oil. We got the second high in a double top formation, and it dropped like a rock yesterday after Monday's reversal, giving us great profit potentials. We have a rally today. I don't want this to go up much more and stay there at all. In fact, the sooner it turns back down, the better, in my opinion. So this does concern me slightly. A little bit between a rock and a hard spot momentarily. So let's see if this bearish engulfing ER sell signal on Monday can push us into new lows below today's lows by the end of the week. But the key here is getting above the high of the red bearish engulfing Monday's high. If that happens, you got yourself an upside breakout and a failure of a sell signal to do as well as I would have hoped. Now, come on, it's already worked. I mean, we sold almost a high tick here, and you've had the first day a great profit, and this morning even more at one point. And if you're very slow to move your stops, well, I can't really help that. My trading system moves stops sometimes every damn minute, depending upon price action. Next chart, soybean meal. Rock in a hard spot, no comments. Next chart. Looking at lower levels, all the lows recently, last several months, getting on to a year almost, have been lower, at least since last September. And that, again, is almost a full year. One big upside spike here for new highs didn't hold at all. Promptly, in a week or two, made new lows. Then the next rally didn't hold, and we made new lows. So I think any rally we're going to see, which could be up to about 504, is not going to stay there, and it's going to make new lows. Next chart, wheat. Pretty much the same comments. Major resistance at 759, call it 760, give or take a few pennies. And we got oversold, so we're bouncing a little bit the last couple of days. And today is almost a minor new high close for the last few days. And we might even make a new high for the last few days. But there's much more resistance above. And I can't help but to think we're going to make some new lows in wheat. Major long-term trend is down. The trend is your friend. I can say it this way. What's in motion tends to stay in motion. Next chart, live cattle. Okay. There may have been, and I missed it, I'm sorry, a head and shoulder top in cattle. I saw it this morning. The first shoulder's got a bearish engulfing air sell signal. I sure as heck didn't miss that. But the top of the market did not have a bearish engulfing, but it did drop off and to a little support, but it really wasn't low enough to think about a shoulder situation. But look what happened. That neckline is the same bull trend line. They're identical. And we rallied to a little double high right here. The top contains a little double high, but the first shoulder didn't. Plus, the little double shoulder, last shoulder high, isn't really at the right timing point. And it's a little higher than I would have expected, but it happened. So basically, you got all the body parts that I've drawn in, and you got a breakout that's totally legitimate. It dropped below the neckline, never went back up above it again, dropped for a few days, and then reversed a little bounce, and now we're fiddling around. If we start making new lows, my minimum downside objective is 171. It could go further. I said minimum. In fact, maybe a chunk more, as a matter of fact. So let's watch this. This could be a head and shoulder in progress. We're a little late to get on board. I wished I had gotten a sell signal on the last shoulder high, which we oftentimes do, but not this particular occasion. We'll see how this develops. Next chart. No man's land, no comment, live hogs. I'm going to wait for more commentary. We have an extremely bullish top, potentially blow-off top in orange juice. It had somewhat, not quite perfectly parallel of an upward slanting channel since early in the year in April. We blew through the top of it for a day or two and then came crashing right back in again where we are now. And let's zoom in. So one sell signal worked for several days and we made some money on that. Unfortunately, the high day a few days ago did not have a bearish engulfing, but it sure as heck was overbought, and it had an upside potential exhaustion gap. Now that gap is closed already, just yesterday's low, very accurately. I think there's a tiny bit of gap left, but that's good enough. So a little bit of a rally today, but a doji inside day, doing nothing really. You make it lower than yesterday's low, we could easily come down to 297, 6543, 293, maybe even 291, and keep on going because you got yourself a little top built. But I don't know. This orange juice doesn't seem to want to quit. So no significant commentary. Whoops, I'm sorry, didn't want to do that one. And I'll go to cocoa. Next on the list, we sold the top. Got oversold at a little support. Bounced a typical amount for about a few days a week. Turned around a few days ago, started to slide again. We're not coming down particularly slow or fast. I guess slow. And I'm looking for a break below 3,300 and probably a move down a bit more. Now, is this a shoulder high in July? And this sideways plus the bearish engulfing highest high, the head of the formation, and a shoulder high a few days ago? I have to say there's a possibility of that. Now, I didn't draw the arch marks in for the shoulders and the head, but it's visually pretty obvious. In this case, the neckline is almost flat, which is not unusual, but you don't have to have, and usually we don't have a flat neckline. For a head and shoulder top, it's usually somewhat upward slanted, not too much. This one's pretty good. I can't say too much bad about it, except the last shoulder was a little sooner than I would have expected timing-wise. But hey, starting to head down. Next chart. We've got the top overbought conditions, and I already talked about OJ. Coffee, we got the bottom of the market a few days ago. Today, we have a new high since the buy signal on Friday of last week at support, the bottom of the support area that I got a big rectangle around, where the market has bottomed out before. I think we're going to go right back up to 168. Next chart. Sugar. Now, this throws a little monkey wrench in my expectation of going all the way down to 20, because this is a pretty big bullish engulfing, but there's no buy signal other than the bullish engulfing, which, you know, is a candlestick buy signal. So will this work? It might. We didn't break down very badly. I have got a downside objective fulfilled already from a resistance kind of double top situation. I measured it and forecast it down. It happened. That's finished. The rally was up to resistance. We're slipped off somewhat, but it's not really staying after making a new low for a month and a half or so. It bounced right off of this level. We'll see what happens. No comment. We're next is, and we're almost finished. I know it's been 32 minutes. This is a long one. Cotton, double top at resistance, but it's coming back again. You know, there's a chance that this thing could get through the resistance level. If it starts printing 89 plus, I'm going to turn bullish on cotton. For the moment, I think it's going to fail and start to slip back down again to say 77. Next chart is the E-mini. Thanks for your attention. Talk to you tomorrow. It'll be shorter.